What's going on, Rhode Island? Welcome to episode 13 of Beers and Real Estate. And we like Bristol so much for episode 12 that we decided to come back. And this time we are a Pivotal Brewing Company, obviously in Bristol, Rhode Island. And let me tell you, this facility is top notch.
Amazing.
This is like an amazing building.
Pretty dope in here. Is this your first time here?
This is my first time here, and I must say I really like it. Amazing facility, amazing seating, even seating outside. I mean, this is just the decoration in here.
Well, it's an old mill building that they renovated.
Yeah.
Awesome.
So I mean, it is totally highly recommended if you're in the Bristol industry to stop by. But guys, in this episode, we are going to be touching on how many different type of loans there are.
And their applications towards the different goals you have in mind.
Yeah,
Correct.
'cause we all know about FHA and conventional, but what else is there? So we'll be touching base. We'll be touching a little bit on that on this episode. So make sure you stay tuned. And obviously, at the end, we are going to be rating the beers that we had. And man, I think I had one of the best beers I have had. So stay tuned.
So this could be one of your favorite breweries.
It is one of my favorite breweries.
Me, Ray
Nice.
Lambert. In lieu of a market update this week, because I feel like I've been repeating myself a lot lately, let's just dig into what you said. Let's talk about loan programs.
Absolutely. Let's do it.
Everyone knows the big ones. You got your conventional. You have your FHA. Conventional recently changed their guidelines where 5% down can get you into a multifamily now.
5%.
5%
I like that. I like
Before
that.
it was 20, no?
minimum. 25 is usually the
Minimum.
Yeah.
I like
That's a big
that.
difference.
So FHA was always the go-to for multifamilies because they're 3.5% down.
Yep.
More forgiving in credit scores, etc. What we've been running into recently is self-sufficiency for an FHA mortgage on multifamilies, and what that means,
I was just going to say that. What does that mean?
Elaborate.
they take the rents of the entire building, not just the 2 units that you want to be occupying, or they take the rents of the entire building, apply a 75% occupancy rate, which means if you have $4,000 of market rent, after they take the occupancy rate of 75%, you now get $3,000 worth of credit for income towards your application. Does that make sense?
Gotcha. So does that add to your personal income or?
It does, but where I'm going with this is that self-sufficiency test. Your mortgage payment can't be more than that $3,000.
Ooh.
Gotcha.
So with values rising and rates rising, self-sufficiency is starting to become a problem with FHA mortgages.
I like that.
Conventional loans don't face that problem.
Okay.
There is no self-sufficiency test.
So that's only for FHA.
That's FHA exclusive.
Got it.
VA has a version of it,
Okay.
but so that conventional coming out with that 5% down for multifamily, that was a good thing for the market. Now, is it geared more towards a more qualified borrower with a 700 credit score? Yes, it is.
But as mentioned before, sorry to cut you off, we have the tools and we have someone to help out.
We have several options at our disposal for credit repair. So if you're a 670, might not be difficult to get to that 700 score.
Okay.
So
Thank you.
Thank you.
So there is help if you're not there at that 700 point,
correct.
So.
But those are probably the 2 loan types that you 2 gentlemen see the most by far, I would
Yes.
say.
So, like in my personal business, everyone is FHA.
Yes.
And most 90% of my clientele, I love. Nothing against FHA. I use FHA for my personal home, and it was great. I wasn't as financially prepared, and I needed FHA to put 3.5% down, and it was great. I'm a homeowner.
FHA has a lot of benefits, believe it or not.
It does.
The rate's usually lower. The mortgage insurance is fixed. So the reason why I say to you guys that 5% with conventional for a multifamily is geared towards your higher credit score borrowers. With FHA, when you get your mortgage insurance, your rate's your rate, regardless of your FICO. With conventional, your mortgage insurance is based upon your credit score. If you have great credit, then the mortgage insurance is very small. If you have terrible credit,
And you're paying more.
Now, Ray, what is mortgage insurance? Quickly.
because you're not putting 20% down, the lender has it as a form of insurance just in case of default.
Got it.
It's part of your monthly payment. You have principal, interest, taxes, homeowners insurance, and mortgage insurance if you're putting less than 20% down.
I like it. I like it. Okay. Now, Manny, we often deal with a lot of investors too that are looking to purchase, multifamilies. What other options in terms of loans are there for investors who are looking, to purchase multiple
That's a
multifamilies?
great question.
Is there something else?
We have a mutual client.
Mhm.
Won't name names, obviously, but he has purchased several homes over the past year.
Mhm.
And it's tough sometimes to get the income on paper to work for certain transactions, but he has the capital to put 25% down.
Mhm.
So there's a program called a DSCR loan, debt service coverage ratio. It's an investor product. If you have the money to put down, the home qualifies based on the income that the home produces and nothing else. None
So-
of your other debts, none of your other properties that you own, just the property itself.
Got it.
Ooh,
Now, what's the catch? Your rate's going to be higher
Ah,
because the bank knows there's more risk involved in that because they don't have that
Okay.
additional layer of income protection.
yep.
Correct.
So I always tell my clients, this one in particular, when we first started talking about the loan, it's the price to play. You don't have the income to qualify, but you have the funds to buy the home and you want to accumulate that asset so you can start accumulating equity. Well, the price to play is that you're going to pay a little bit of a higher rate. Actually, we had a transaction with all three of us involved.
Yeah.
That loan saved the day.
Yeah,
That
absolutely.
loan saved the day.
Absolutely. And I know he's very grateful that he has the property.
Yeah.
So
That property was a cash cow.
that was
Is a cash cow.
that's a great option for people that don't know. Like I said, I deal primarily 90% FHA, conventional here and there, but mostly my bread and butter is FHA, that first time home buyer. I know you've been, in the game a lot longer. You know a lot of investors, so that loan is a great option. I didn't know about that, so that's nice. That's good to know. It's another arsenal, another tool in the bag.
And we also nowadays, like most of the loans that we deal with, they're fixed rate loans, but there's also some loans that are not fixed for the life of them.
You
So,
actually, to peel the curtain back a
Yep.
little bit, we discussed topics that we're going to talk about on this.
Yep.
And you asked me why ARM mortgages aren't more popular.
Yep.
And, I hate to say this, but I don't know. I don't know. Generally, so in a low rate environment like we have a COVID,
Yep.
ARMs don't make any sense.
Correct.
Rates are low. In a higher rate environment like we were just in and still kind of currently are in, an ARM should and could be a good option because you take a initial lower rate and then it might adjust 3 years, 5 years, 7 years, 10 years.
So it's fixed for that period of time,
Yeah,
and then it adjusts after that.
and there are caps to when it can adjust.
Okay.
Gotcha.
Now, I don't know why the market didn't bear fruit where ARMs became more popular.
Yep.
I just don't know. Credit unions are good at ARMs. Local banks like Central Bank around us, they're good at ARMs. But a lot of the mortgage lenders, a lot of the big boys, Quicken or Semper or us, ARMs just were never priced competitively, which I find fascinating because you would think that this would have been the market for it. Now, if we're going to talk about ARMs, I do have to talk about the fact that is what was one of the driving forces of the housing crash of 2008. A lot of regulations went into place since then. So I mentioned the word cap to you two gentlemen.
Yep.
Back then, there wasn't a cap. Your rate would adjust to whatever the Wall Street prime rate was.
I like
Or
it.
is. Now, if I sell you a 3%, and let's say it's a 3-1 ARM, meaning that means it'll adjust every 3 years.
Okay.
It'll adjust after 3 years.
Yep.
1 year annually after that until you either sell or refi.
Okay.
But that adjustment has a 2-point cap. That's the most it can go up. So if I put you at 3, the most it can go to 5.
I like it. This is
And
something.
I'm doing the mortgage thing that I hate. We talk about numbers. You really,
Well, these are the type of math that we can all do.
Yeah, and exactly,
So-
exactly. That's
But that cap was put in place, Manny, to protect people from themselves.
Okay. I like it. I
Does
like
that make
it.
sense?
now.
It
I
makes
like that. That's great information. Like I didn't know about that. I wasn't around in real estate for 2008. When there was the ARMs were available.
Well,
But
the
that's
payment's low in the beginning.
yeah.
And this is what I mean by protect you from yourself. The payment's low in the beginning.
But then like I said, in 3 years that payment's going up.
And when you're in underwriting, they actually qualify you based on the highest possible rate over the life of the loan.
That's good to know.
they put a lot of things in place to make sure that we don't repeat what happened with mortgages.
We have a mutual client, and he keeps going back to 2008. Things are going to crash, prices are going to fall,
Yeah, we do.
interest rates are going to go. There's a lot of regulations in place, a lot of rules now. Banks have to follow certain rules. The qualifier, me as a buyer, there's certain things I have to meet, certain criteria in order to move forward. I can't just, hey, I want to buy a house. Okay, here's your rate. It doesn't work that way, right? So there's a lot of things in play to protect the bank and to protect myself as a buyer.
I've always said housing is the backbone of our economy.
Yeah,
Absolutely.
All of that regulation they put in, a lot of people feel like the mortgage industry is overregulated, and they're probably true to a degree. But I think we all saw the impact of not being regulated at all.
correct. Everything crashes, and you don't want that, right? Like, yes, we want more inventory, but I don't want everything to fall apart around me either. I'm not going to chaos mode. We don't need that,
One side effect I will say, you two gentlemen, of the industry slowing down a bit.
Yep.
There's a lot of scrutiny on every single transaction that happens.
No.
Yeah, everything's under a microscope, right?
Yeah.
So you have to make sure your I's are dotted, your T's are crossed, and multiple times. It's not just the first time; it's multiple
Things
stages.
can come up until I tell people until we're clear, until the keys are in your hand.
And
You never know.
And that's an important point. I tell all my clients, whether you're on the buying side or you're on the selling side, it's not 100% until you get those keys. Sign the final document, and until keys are exchanged, whether I'm buying or selling, I get rid of my keys or I'm getting new keys, then I can calm down. But you will be checks and balances throughout the process.
I mean, I can tell you a million horror stories. I have sellers that walked away the day prior to the sale. I've had buyers that walked away the day prior to the sale. I have property that have flooded the day before the sale. So again, you just never know. It's never official until we sign that dotted line. A bank statement loan, is that similar to the DSCR, or is that like something different?
So it's that's what we call a non-QM mortgage, non-qualified mortgage.
Yep.
Portfolio products you might hear referred to as. That's usually what I call them.
I've heard that, yeah.
It's similar in the sense that it doesn't go over traditional income guidelines.
Yep.
Most common bank statement programs, they look at a history of 12 months or 24 months.
Okay.
You have to be self-employed, and you have to have steady revenue going into your bank statements monthly.
So that's for self-employed folks, basically.
Correct.
Okay.
You can qualify off of that. They use an average as an algorithm. I have an income worksheet for it. I could detail it for you guys because I'm not.
A simple overall,
Yeah. No, but that's pretty good.
Yeah.
That's pretty good.
Again, though, the rates are higher.
Yep.
Price of play. However, so this is the way to manage your income that you report to the government.
Yep.
Responsibly while still being able to qualify to buy a mortgage.
Gotcha.
I like that. I like
Interest
that.
rates on average point and a half higher.
I like that.
But like I said,
the other thing, just to be completely transparent.
Yep.
There are a lot of origination points with these products, usually 3.
Great.
Again, price to play.
exactly. There's a price to pay at every beginning home buyer. There's a price to play. Your investor, up front, right? And you're very upfront with everything, and that's great.
Oh, here are your fees, yeah.
Exactly.
I hate surprises.
So, like, we've talked about investment. We've talked about, FHA, conventional, briefly.
Let's not forget about our war heroes here.
Yes, I was gonna say, I
with
have
the
a
VA
friend.
loan.
I have a friend who's a war veteran, and what are his options?
So we probably a good one to end on. VAs are my personal favorite mortgages.
Absolute great loan.
They get a bad reputation. VA appraisers, 99% of the time, go by the same guidelines FHA do. There's a couple of little variances here and there, but if you have an FHA appraisal and you're not worried about it, you shouldn't be worried about a VA appraisal.
Okay.
They're for our veterans, active, non-active. If you were in the reserves, you just had to serve for 6 years. If you were active, you just had to do 1 deployment, and you can qualify. They allow you to put 0% down.
Nice.
0. The rates are better than conventional.
Better.
Competitive with FHA.
Woo.
They don't carry mortgage insurance, period.
Oh, that's a good one. That's nice.
Yeah.
Okay.
VA loans are awesome. If you make that sacrifice to serve for our country, the VA did do a good job of giving an incentive to buy a home for the country that you defend.
I mean, I've done countless of like the VA loan with buyers, and I never had any issues. People sometimes think, "Oh, it's a VA loan. It's going to be trouble." No,
To be honest with you, and it's such a
never had any
misnomer,
issues.
it's frustrating. VA allows for the highest debt to income ratio. It's really not that close.
Mm,
Credit score very similar to FHA. They allow for lower credit scores if needed.
yep.
Again, no down payment, no mortgage insurance. You would think that
That's a
if
nice
you see
savings.
a VA offer,
Yeah.
you would think that that's something you would want to look at strongly.
Yeah,
Absolutely.
absolutely, yeah.
Yeah.
Okay.
Well, ladies and gentlemen, this has been a great episode so far, learning about the different type of loan options. Well, ladies and gentlemen, this has been a great episode so far, learning about the different type of loan options. But now it is my favorite time.
Let's
Of the
rate
show.
let's rate the beers.
So now it is
Woo!
time to rank the beer that we've had at this brewery that has awesome views. So we'll start with Manny today.
Yeah,
See what he had.
I had a hazy IPA.
IPA again. He's an
Yeah, I
IPA
had
man.
it was a Celestial Plume. That's the name of the
Ooh.
IPA I had. Great beer. If you like a hazy IPA,
Yep.
the flavor was great. It was nice and smooth.
Ooh.
Had a little aftertaste. I don't know what fruit it was, but great beer. I'm gonna say 8.5. Solid beer.
Wow.
All
8.5.
Yeah.
Nice.
And
8.5.
That's good.
I love this location. I love the vibe. It's a great place, but beer 8.5.
Wow.
I'm gonna
Well.
jump in because you were in love with your beer, so I think we should save you for last. I had a coconut-inspired sour. I can't think of the name, and there was a giant plant blocking the sign.
The tropical wavelength.
Tropical wavelength.
Yeah, that was
Had a hint of coconut in it.
Yeah.
Coconut blueberry is my favorite flavor of Red Bull. I like coconut. I like Mounds. 8.1. That was a very good sour. I enjoyed it thoroughly. Again, to pick up on your point, the ambiance here is beautiful.
Yeah,
I like the whole vibe.
This is cool. It's nice and
Yeah.
relaxing. Like it's eclectic. That's the word. Like the chairs don't match, but it's a nice homey vibe. It's cool
Yeah.
to relax. Like it's nice. I love it.
No, this place we definitely have to come back.
Yeah.
So yeah, this place they've done an amazing job.
What did you have?
I went
You had the
with
Pivotal.
the Pivotal
You had
Pilsner.
yeah.
And people, let me tell you, if you're into Pilsners, well, let me take it back. My favorite Pilsner is from Long Live. That's like my favorite brewery out in Providence. So shout out to Long Live. That's a PVD Pils. But people, I think I just found a new favorite Pilsner in Rhode Island. And Pivotal Pilsner is the one. Number one in the state. I'll put it up against any other Pilsner in the
Wow.
state. This is hands down the top one. Easy to drink. You can drink it all day. It's like,
Yeah.
ultimate summer beer there. No overwhelming flavor or anything like that. No weird aftertaste or anything like that. I'm giving this one a 9.6.
Ooh,
Awesome.
that's
All
high. That's nice. All right.
He's a
Awesome
tough
beer.
creator, folks. He's a
Yeah.
tough creator.
Yeah.
Awesome beer, guys. Make sure that next time you're in Bristol, you check these guys out. Thank you for tuning in to episode 13. For episode 14, we don't know where we're heading, but maybe we'll come back to Bristol. Who knows?
Maybe Bristol, or maybe if you want to drop a comment on our page, let us know your favorite local brewery.
Let us know what you want to.
Down for that.
We'll take a tour. If you say, "Hey, I have a spot in Newport," we're going to Newport. So let us know.
Let us know. So subscribe, like, and share the channel.
I have a gringo question before we end things
Uh-oh.
here. I got a
Uh-oh.
gringo
Uh-oh.
question.
Let's
I'm sorry.
Let's see.
What does boy say bebe mean?
Today we drink.
And
Boy,
and on that
se
note,
bebe.
there you go, guys.
Bye-bye.
Take care.